I am increasing my exposure to fixed income. I think the next cycle trend in macro will be the fact that the data for this year will be disappointing. Don't forget that less than 2 months ago we were all running around congratulating each other on how a higher growth recovery in place, Europe in a better spot. Now we have the Russian situation, we have the oil market showing us that growth is weak. We are seeing that overall that the data has disappointed again and again. So I think right now fixed income is the only market I see for the balance of this year being up. No, I think I'm on the record for saying that the Fragile 5 and even the Fragile 8 will be under some pressure this summer, mainly because they are all trying to rebalance their economies. They're trying to reduce the current account deficits for many of these countries. And that means essentially they have to weaken their own currency. Weaken their own currency means that investors should not be going into these currencies. So overall, I think emerging market will be a major buy as we go out of 2014 and into 2015. But until then, the emerging market is a waiting game. I will not, however, be short emerging market. I just don't think right now, in time of rebalancing the economies, trying to get a gauge on what goes on in emerging markets is too difficult. And overall, don't forget that 90% of the return you have as an emerging market investor comes from currency, and the emerging market are telling you that currency will be weaker. Well, there's some, of course, I like, and some I like less. I like something like Indonesian rupiah long term. I think fundamentally right now buying some dollar-denominated debt in Indonesia makes sense. I think India, when they go past this crisis that I think will come after the election, I think it will be an interesting story. So I think overall for emerging market currency, I would say all of them have the same risk, and the risk is that actually they're trying to do something which is to rebalance the economies. Rebalancing the economies via weaker currencies, not the way it will work. It will be through the reforms. So when the reforms comes in place, I'll be buying all of the emerging market Asia currencies. Unfortunately, no. I would love the fact that, as I know, Asia predominantly love gold over anything else as an asset class. But I think we are at the end of the cycle, because right now we have a deflationary force not only in Europe but also increasingly in the US. As inflation falls, of course, it increases the real rates. The real rates hurts gold. So I think we've seen the top in gold, or will see the top in gold very soon. Having said that, as I indicated earlier, I think tapering will actually stop over the Q2, after Q2 this year. So there may be another rally installed, but I think overall for this year, again, commodity overall and certainly also metals will not have a stellar year, but I think commodity will do better than equities this year.